take that question. We finally have Vivek Bajaj, co-founder, Stock Edge right now. Mr. Bajaj, the same thing that I was asking, Chetan, what would be your advice right now? What are we really looking at where India is concerned? Especially a lot of investors completely spooked of the bloodbath we saw. We talk about the Black Friday. Today, what we've seen is a Black Monday.
Let me start by sharing a data point with you. If you consider last 5 years return, which a typical large cap fund has given in a mutual fund category, it's around 24%. If you look at last 5 years mid cap fund return, it is 31% CAGR. If you look at small cap fund, it's 35% CAGR. So that means if you call an investor a true investor, the investor will stay in the market for long term. That is a clarity. And 5 years is a reasonable period for us to make a judgment that whether long-term return holds in India or not. So I would say that yes, short-term volatility is part of this game. Stock market is meant to be like that. It is much more reactive to any action which is socio-political in nature or anything which leads to money. There is a short-term reactions. So if you believe in India's story, long-term story, if you believe in the structural changes which has happened in our country, if you believe in 2047 story, then I think staying invested and not stopping your SIP, let it continue the way it is happening and not look at the market on a real-time basis makes sense for a typical investor. But my problem here is that people say that they're investor, but they become traders, and people who are traders, and when they start losing money, they become investor. So basically, the people who participate in market, they don't know why they are participating. They are just participating because someone has probably asked them to participate.
Right. But, Mr. Bajaj, what we were speaking of earlier, because the growth story of the Indian markets was also fueled by, the small mid-level investors. And today, a lot of them are completely spooked with what we've seen.
Yeah, absolutely. There is a typical habit of small unknown investors or people who are relying on other people that they typically come when the market is at a high point, because that's where the most of the money will chase the market. And when market is falling, people are generally scared and they want to exit the market or they want to stop the SIP. That's a classic behavior of a retail investor. But you have to understand that a person who knows how to make money from market is actually a contrarian, someone who understands the story quite well. And that person will never do the mistake which a typical person will do. It's all about psychology. It's about behaving in a certain way when you are not supposed to behave. So really, my point is all investors, first thing first, they need to know themselves, need to know why they are in the market. Are they truly a long-term investor or they are traders? So if they are traders, I think market gave enough opportunities to all of us to exit. This market has been very, very kind to traders. I mean, if you see the fall of the market has fallen by almost 15, 16%. If you see the fall has been quite calibrated. This fall which has happened, it's because of the massive action taken by US. But dollar index or other indicators were already giving us a hint that there is something wrong with the market. So a sensible trader is already very light position in the market. Yes, the investors.
Mr. Bajaj, before I just let you go, would you reckon with what we've seen today, is there an overreaction or do you think what some say this is justified correction?
So this is justified correction. Look what is happening. There is a way US has been functioning for last 50 years. If you go back 50, 60 years, they intentionally led the GDP growth driven by consumption story. If you look at the GDP formula, GDP is equal to C plus G plus I plus X minus M. That's a typical formula. US intentionally make sure that we will drive the GDP growth with consumption. That's why US consumers, they are the ultimate consumers. But this has led to massive debt. Same US consumer who was consuming was leading to a deficit, which was the money which was going to countries like China, which were in surplus, and they were investing in US Treasury, which was basically a circular trading which was happening, which led to $36 trillion of US debt. Now someone had to bail the cat, and because he is a businessman, he understands the relevance of low leverage balance sheet, and he's supported by Elon Musk. So they understand the relevance of that surgical strike which was needed. And obviously, you
Okay.
know that when there is a strike, there is a casualty.
Well, the casualty is also their own country right now with what they're witnessing. But I appreciate you
Absolutely.
joining us, Vivek Bajaj. Well, what we're really looking at right now, and something that the news that we broke, is a possible trade war because China, hit back with a higher tariff, retaliatory tariff, and now you have the president of America come back and say we're going to raise it even further. Trade war looming. Some say even recession. We're going to keep a close eye, get our viewers the latest.